Welcome, dear viewers. Before we delve into the world of investing, it's crucial to note that we're not financial advisors. The content of this video is purely educational. Our focus today is on two popular investment options, stocks and cryptocurrency. We'll explore their fundamental differences, their similarities, and the potential risks and rewards associated with each. Our aim is to equip you with a basic understanding to help you make informed investment decisions. So buckle up as we journey through the fascinating world of stocks and cryptocurrency. To kick things off, we delve into the traditional world of stocks. At their most basic, stocks are a type of investment that represents ownership in a company. When you buy a stock, you're essentially buying a piece of that company. You're placing a bet that the company will be successful and that its value will increase over time. But how exactly does it work? Well, companies issue stocks to raise money for various purposes. It could be for research and development, expansion into new markets, or even paying off debt. Once these stocks are issued, they can be bought and sold on various stock exchanges around the globe. The beauty of owning stocks is that as the company grows and prospers, so does your investment. When the company makes a profit, a portion of that profit may be distributed to shareholders in what's known as a dividend. And as the value of the company increases, so does the value of your stocks. You can then sell these stocks for more than you paid, making a profit. However, it's not always a smooth sale. Stocks come with their fair share of risks. The value of stocks can fluctuate, sometimes quite dramatically based on a whole host of factors. These can range from the company's financial health to broader economic conditions. There's always the risk that the company might underperform or even go out of business, which could lead to a loss on your investment. Yet, despite these risks, stocks have long been a popular form of investment. Why? Because historically, they've provided a higher potential return than other types of investments. Plus, there's something quite compelling about owning a piece of a company and sharing in its success. But remember, investing in stocks requires careful consideration and a good understanding of the market. It's not a game of chance, but rather a strategic maneuver, much like a game of chess. So, in essence, when you're buying a stock, you're buying a piece of a company. You're investing in its present and its future, with the hope that as the company grows, so will your wealth. Now, let's switch gears and talk about the new kid on the block, cryptocurrency. Cryptocurrency, as the name suggests, is a form of currency. But unlike your dollars or euros, it's completely digital or virtual. It's like money for the internet. But what makes it special, you ask? Well, it's not governed by any central authority like a bank or government. Instead, it operates on a technology called blockchain, which is a decentralized system spread across many computers that manage and record transactions. Now, you might be wondering, how do you use cryptocurrency? Well, you can use it to buy goods and services online, or you can hold on to it as an investment, hoping its value will go up over time. But be warned, the value of a cryptocurrency can be incredibly volatile. One day you might be sitting on a gold mine, and the next, it could be worth pennies. This brings us to the risks. Cryptocurrencies are relatively new and their future is uncertain. They're subject to minimal regulation, and there's also the risk of online hacking. Remember, once a cryptocurrency transaction has been made, it cannot be reversed. Despite these risks, cryptocurrencies have been gaining popularity left and right. Bitcoin, the first and most well-known cryptocurrency, has seen its value skyrocket since it was first introduced in 2009. And since then, thousands of other cryptocurrencies have been created, each with its own unique features and uses. The appeal of cryptocurrencies lies in their potential to become a new kind of money that is secure, easy to transfer, and not subject to the control of central banks. They also offer the potential for high returns, although with high risk. But let's not forget the benefits. Cryptocurrencies can make transfers faster and cheaper, especially for international transactions. They can provide financial services to people without access to the banking system. And they can create opportunities for innovation in the financial sector and beyond. Thus, when you invest in cryptocurrencies, you're essentially betting on the technology behind it. Having understood both stocks and cryptocurrency, it's time to compare the two. They're both forms of investment, yes, but they differ in quite a few ways. Let's start with risk. Investing in stocks or cryptocurrencies is inherently risky. There's no escaping that. But the nature of the risk is different. Stocks are tied to the performance of a specific company and the overall health of the economy. If a company does well, its stock price generally goes up. If the economy is strong, most stocks will benefit. Cryptocurrencies, on the other hand, are not linked to the performance of a particular company, or even a specific economy. Their value can fluctuate wildly based on a variety of factors, including technological changes, regulatory developments, and market sentiment. This can lead to significant price swings, often in a very short time. Then there's potential returns. Stocks have historically provided steady, long-term returns. They're a tried-and-true investment vehicle. Cryptocurrencies, meanwhile, are much more unpredictable. Some people have made fortunes by investing early in Bitcoin or Ethereum, but others have lost substantial amounts when the value of a particular cryptocurrency plummeted. As for liquidity, stocks have a clear advantage. They're traded on regulated exchanges and can usually be bought or sold with ease at any time during market hours. Cryptocurrencies, while also traded on exchanges, can sometimes be harder to buy or sell, particularly during periods of high volatility or for less popular coins. Speaking of volatility, it's a defining characteristic of cryptocurrencies. The value of a cryptocurrency can change drastically within a matter of hours. Stocks can also be volatile, particularly in times of economic uncertainty, but typically not to the same degree as cryptocurrencies. Both stocks and cryptocurrencies are subject to market forces, but they operate in different markets and under different regulatory frameworks. Stocks are regulated by governmental bodies like the Securities and Exchange Commission in the United States. These bodies enforce rules and regulations designed to protect investors and maintain fair markets. Cryptocurrencies, however, are largely unregulated. This can make the cryptocurrency market more susceptible to manipulation and fraud. But it also means there's potential for greater returns as there's less red tape and more room for innovation. So, while both stocks and cryptocurrencies offer avenues for investment, they do so in very different ways. Stocks are a more traditional investment, offering potential for steady, long-term growth. Cryptocurrencies are a newer, more volatile investment with the potential for high returns but also significant risk. It's up to each individual investor to decide which is right for them. As we wrap up this journey, let's summarize the key points we've discussed. We embarked on a journey of discovery, where we delved into the world of stocks and cryptocurrency, two investment vehicles that have the potential to yield significant returns. Firstly, we explored the traditional realm of stocks. Stocks represent ownership in a company and stand as a claim on part of the company's assets and earnings. They've been around for centuries and have become a staple of wealth building for many investors. Companies issue stocks to raise capital, and investors buy them with the hope that the company will grow and the price of their shares will increase. However, it's important to remember that investing in stocks also comes with risks. The value of stocks can fluctuate, and there's no guarantee of returns. On the other hand, we ventured into the new age world of cryptocurrency. Cryptocurrencies are digital or virtual currencies that use cryptography for security. They are typically decentralized and based on blockchain technology. The most famous of these is Bitcoin, but there are thousands of other cryptocurrencies out there, each with their own unique features. Cryptocurrencies can provide high returns, but they are also highly volatile and can be subject to regulatory scrutiny. Both stocks and currency offer opportunities for investment. They also come with their own sets of risks. Stocks are subject to market volatility and the financial health of the company in which you're investing, while cryptocurrencies are subject to regulatory risks and the inherent volatility of the crypto market. The most important thing to remember, whether you're investing in stocks or crypto, is to do your research. Understand the market, the product, and the risks involved before you invest your hard-earned money. Don't just follow the crowd, make informed decisions based on your own analysis and understanding. Investing can be a great way to grow your wealth over time, but it's not a get-rich-quick scheme. It requires patience, discipline, and a well-thought-out strategy. And while we've provided a basic overview of stocks and cryptocurrency, there's still so much more to learn. Remember, the world of investing is exciting, but it requires careful planning and consideration. Thank you for watching, and don't forget to like, comment, and subscribe, and hit the bell notification for more updates from us.